Welcome to The Chemical Show, the podcast where chemical means business. I'm your host, Victoria Meyer, bringing you stories and insights from leaders driving innovation and growth across the chemical industry. Each week, we explore key trends, real-world challenges, and the strategies that make an impact. Let's get started. Welcome back to The Chemical Show, where leaders talk business. It's the end of September 2025. We are wrapping up the third quarter and getting ready to head into the fourth quarter. And you, like other leaders across the industry, are looking to finish strong, close out what's been a rather tumultuous year, and set yourself up for success in 2026. That's exactly what this episode is all about. I'm going to be talking about the key themes heading into Q4 and how leaders can and should respond. This is the quarter where strategic discipline really differentiates those who are merely surviving to those who are positioning to grow into 2026. That's, by the way, aside here, this is some of the things that we're going to be discussing live and in person at the Chemical Summit on September 30th and October 1st. If you're listening to this episode when it comes out, then there is still time to be in the room. If you're listening to this later, well, we'll see you next year. In any case, head on over to thechemicalsummit.com for more details. So let's talk about 2025 and where we are sitting currently. Let's be honest, it has been tumultuous. That's my word. I've decided that is the word of the year. Whether it be market disruptions, trade, tariffs, etc., we're going to be talking about that as we go along here. I'm going to be highlighting the market trends that are leading into Q4 2025. This gives us context. You guys are living it, but let's just re-anchor in the context of where we are today. And then I'm going to be talking about the strategies and the execution and the discipline that you need to as you head into Q4 and set yourself up for success in 2026. So let's talk about this. The top 5 market trends heading into Q4 2025. And you tell me if these are your top 5 or not, but these are my top 5. What are we seeing? Number 1, permanent asset shutdowns and poor utilization across many parts of the industry. Right? No surprise there. We're seeing announcements, it seems like almost daily, and these are no longer just temporary curtailments, right? So at times, you know this, units are slow to restart, or maybe we're idling a unit or what have you. Now companies are taking strategic measures and permanently shutting down assets, right? We're seeing this a lot in Europe. We've seen some of this in the US. Dow, BASF, LyondellBasell, Sabic, those are some of the big names you've seen, but there's also smaller companies along the way. Part of this is fundamental structural differences in energy, right? These guys are all citing high energy cost structures, policy impacts from sustainability, from energy policies and other things. There are measures being taken place, right? But it's a little bit late for some of it, right? So companies have made these decisions to make some changes. Why does this matter, right? So this is a pretty fundamental restructuring of the industry. We've seen this happen before. I've seen it happen in my career early on at various points in times. I think the last time we've really seen some major structural changes was the late 90s, early 2000s. Even 08, 09, when there was some bankruptcies, hello, but LyondellBasell, I'm talking about you, and others, we didn't see the restructuring to this degree. So this is a pretty dramatic change with knock-on effects for supply security, trade flows, and more. So that's one. And what's going to be interesting is next week is my interview with Dewey Johnson from Chemical Market Analytics. We talk about some of this, right? So it's not just these structural changes, it's the fact that we're expecting a pretty flat and slow recovery. So you're going to want to tune in next week because Dewey and I talk about that and more. The second key theme heading into Q4 as we wrap up Q3, heading into Q4, is trade and tariff volatility, right? No doubt. Do we have a tariff? Do we not have a tariff? How the heck are we calculating this tariff? You guys are living it, right? I don't fortunately have to live it as much other than when it shows up on my doorstep and my products, etc. But these trade disputes and tariff shifts are really influencing behaviors across the industry, right? And then if we add in ongoing geopolitical situations between China and North America and the Middle East and everywhere, right? It seems like we've got geopolitical situations and tensions in a lot of places. That's having an effect on our on the industry. And why is this important? Volatility is tough to deal with, and the bigger issue to deal with, and that I hear collectively from people, is uncertainty. It is hard to manage around uncertainty. You can do it, right? So some of the ways that we talk about doing this is through scenario planning, assessing what those options might be, et cetera. But this volatility and uncertainty is hard to deal with, but it also creates opportunities. If you are prepared to take advantage of that volatility, if you've mapped out your scenarios and situations and how you want to respond, you're able to capture share, you're able to capture volume and margin, and that's a great thing. By the way, cue the supply chain teams, right? So we're talking about that and more at the Chemical Summit. I've been talking to some supply chain leaders who are like, Victoria, finally, supply chain is getting its due, because the response to tariff and trade volatility and uncertainty comes through in our supply chains. So more on that later. The third theme coming through is capital constraints and higher cost of financing, right? It's just more expensive. People have less free cash flow. It's more expensive to borrow money. This leads us to this whole situation of cash is king, right? Focus. Companies are being more selective in their investments, where they're putting in projects, where they're just spending money. You still have to spend money, guys. And I think we're seeing that. Absolutely. People recognize that they still need to spend money to visit customers. They need to make strategic project decisions, but there are far more capital constraints. And so we're seeing a slowing down, a more mindfulness. And in fact, again, part of this is coming into just cuts. With plant shutdowns come talent restructuring, right? So the big guys, whether it be Chevron Phillips, LyondellBasell, we're seeing a lot of announcements. In reality, I talk to people regularly that are in transition at inflection points, coaching them through how do they handle those situations that maybe were expected, but the timing is sometimes a surprise. Well, these things happen. So again, back to this whole capital constraints, how it plays out. There are regional differences. We talk about that, but this is certainly something facing companies across the chemical industry. The fourth theme heading into Q4 is around decarbonization, right? So this is, you could call it the decade of decarbonization. I might. The reality is across the chemical industry has been improving itself, decarbonizing, improving its air and water quality, all these things. But we are really focused in on decarbonization until we're not. And now what we're seeing is really strategic, back to the strategic discipline around large-scale projects being paused, right? So most recently, we've seen Dow has delayed its net zero cracker in Canada. They've made some other decisions and announcements around delaying some of this investment that they've got. And so we're seeing the big stuff get delayed. The reality is incremental efficiency, scope 3 collaborations continue. So it's all ever more important to be operationally effective and execute effectively. And we're going to be talking about that. The other thing we're talking about is that there is still a business case for sustainability. So that's actually one of the panels at the Chemical Summit is about the business case for sustainability. And we've got leaders from ACC, Celanese, and Linde and others on that panel talking about what is the business case. The other thing to be listening to as a podcast listener, we have an upcoming episode at the end of October with Together for Sustainability Initiative, TFS, which focuses on sustainable procurement. So it's a great interview with Jennifer Jewson of LyondellBasell and Danielle Warnock of Nouryon talking about the importance of sustainable and responsible procurement. Oh, that was a hard one. Sustainable and responsible procurement and the business case for sustainability. So you're going to want to tune into that episode as well. That's coming up end of October. And the fifth trend that we're going to talk about here, and you've seen this, is uneven demand growth, Maybe there's some lack of growth, some weakness in overcapacity, certainly in commodities. We've talked about this before. There's strength in certain specialties, but it's volatile. It's really product and market specific. And it's influenced, of course, by capital policies. It's influenced by energy costs. It's influenced by the demand that's driven as a result of what's going on in the world today. So those are my 5. So as a leader, what does this mean for you? What should you be doing in Q4 2025 to set yourself up for the year end and to position for 2026, right? So I talked about this a little bit earlier. What I would say is now is the time to demonstrate execution maturity, right? Execution and discipline are ever important. And this is really the quarter. This is the time when times are tough, where strategic discipline sets you apart. And we're going to see the winners and losers playing out over the next year based on responses to what you're doing today in 2025 and how it rolls into 26 and beyond. So here's the themes, and here's what you as a leader can be doing. And by the way, this is you as a leader. If you're at the top of your company, this is you. If you're in the middle of your company, just kind of working in the stew of things, this is also the why of why you're doing some of the things you're doing that sometimes seem disconnected. And I know at times when I was junior in my career, there were decisions made and actions taken that I was like, why are we doing this? That when you get a bit bigger picture, right? Elevate up, not just in terms of your role, but if you just elevate your picture and what you're looking at, you see some of these patterns, some of these leadership behaviors, and the decisions and the discipline and the strategic execution that you're taking that ends up making sense for the long term, right? Here we go. Number 1, tighten down operations while protecting strategic growth. What does this mean? Really, we are doubling down on margin management, energy efficiency, cost discipline in Q4. I'm already hearing here as we sit in September of companies starting to slow down and dial back on their inventories, maybe containing and planning and strategizing a little bit more on orders, products that they're bringing in, orders that they're putting out, really around this whole discipline to have cash and cost discipline to finish the year strong, to still fund strategic growth, because again, strategic growth is critical. Funding your money and putting your money in the right place is critical. Where are we seeing this, right? So what I would say is leaders are not just trimming costs for survival. It's really about freeing up capital to fund transformational growth, right? So we're going to talk in a minute about portfolio discipline and how some businesses are cutting assets. Well, when somebody is selling, you got to have cash to buy, because if you don't have cash to buy, you miss out on opportunities, right? So that's part of what we're doing here as we think about, and what leaders are doing, what you could be doing is really around tightening cash management, margin management, so that you've got the money in hand, the capital, the working capital, your financial levers to do what you need to do in the future, right? So we're seeing this across a number of companies. Why does it matter? So, right, of course, number 1, heading into Q4, if you're a publicly traded company, it's about what your investors see on the books. If you're a private company, it's still about that year-end financial reporting is critical, but it's also about having, again, the money to reinvest in innovation, in M&A, sustainability projects, and frankly, just to keep the lights turned on, because sometimes it's a rough patch, and we're in a little bit of a rough patch, especially depending on where you are. So, the mantra that we often hear is cash is king, right? The second action that you can be taking as a leader, and that you see leaders and companies taking already, is around portfolio discipline and selective investment, right? So a lot of big words, but really taking a look at non-core businesses for divestment. And lining up investment cases for growth. So a great case in point, recently DuPont announced the sale of its specialty materials business, Nomex and Kevlar, to Arclin. the reality is it's still a good business. It's just not a good fit for where DuPont is and where it wants to go. So getting smart in terms of what product lines you want to be in, what assets make sense to have. And so that, in your case, it might be pruning. And I always talk about, as a gardener, you sometimes have to prune to grow. And we're a bit in that mode of pruning the assets, the business lines that don't make sense for you today and in the future. Again, strategic discipline, and other people acquiring them because it makes great sense for them. They have a unique value that they can apply that helps them to grow. So portfolio discipline and selective investment. The third thing here is around stress testing supply chains for resilience. You guys have heard me say this. It is the decade of supply chain. I feel like everybody's like, oh, Victoria, are we not done yet working on our supply chains? And the answer to that is no, of course you're not. When products move, when your businesses shift, when the situations around you are changing, you need to keep assessing and evaluating and refining your supply chains, your supply chain strategy, your discipline of execution, right? So a couple examples recently, and I talked about this when I talked about Q2, my reflections on Q2 earnings reports, Clariant. They've announced that they've got something like 70% of their business is local sourcing. Makes sense, especially for a specialty chemical company, but it also provides resilience against transportation, tariffs, other situations that are making it really hard to plan. And what is different today about this, right? Again, because you're like, we've been doing this. I know. And frankly, you're never going to stop. But what's really different about right now is when we think about resilience, it's like patching vulnerabilities. You're fixing things up, but it's really about turning resilience and reliability into customer value propositions and recognizing the strength of your supply chains, both physically as well as the people that are in your supply chains, and your know-how and your ability to apply different strategies, different tariffs, different relationships. This is a competitive advantage, right? It is really a difference maker for the businesses that are able to turn it on. Nushin Shamsili, who is the CEO of Nuco Logistics, she's been a past guest on the Chemical Show, and she's going to be a panelist at the Chemical Summit. She and I just had a conversation recently, and she's like, finally, Victoria, supply chain is becoming a valuable partner and not just a utility. We're recognizing it. Yes, we are, and smart leaders do. All right. So that's my third item. Number 4, advancing decarbonization commitments. Okay. Q4 is really the time to sharpen your transition roadmaps, right? So the goals that have been set out there have not gone away. Maybe they've been deferred. Maybe they're being approached differently. I know that some people feel like, sustainability is no longer important. And I sometimes ask that question, like, is sustainability important still? The answer is yes. Who is it important to? It's important to your customers. It's important to your shareholders. It is important to your future employees. It's important to just your license to operate on a long-term basis, right? So certainly we've seen recently, right, Dow paused its net zero cracker project in Canada and some other things, and yet has continued to sign incremental plans for electrifying assets, signing renewable energy contracts, reporting on its Scope 3 supplier data. That's just one example. So it's really about being very mindful and strategic and focused, more tactically focused on things that are more controllable and deliverable. So that's important to think about. Can you actually deliver on your promises? That's important, versus these bigger promises, big booming promises that we saw everybody make a couple of years ago. Nobody's making those anymore. Still continuing to advance decarbonization and sustainability, focusing in on bio-based products, greener products. Yes. Investors, customers, stakeholders expect clarity, and they expect credible progress. And so companies and leaders that are articulating that articulating those really concrete next steps are winning trust and they're winning capital. 5, talent and culture readiness, right? So I didn't really touch on talent in the beginning part of this in terms of themes, other than, hey guys, you and I are both seeing a lot of layoffs across the industry. Not necessarily widespread, or maybe they're widespread. Let me know what you're seeing, but we're certainly seeing enough of that. I'm hearing it. People are reaching out. The announcements are in the paper. Individuals are talking. But talent is important. It's not just about the fact that we are streamlining talent. It's that talent is, and people and culture are defining success, right? If I think about all the trends and the themes that are influencing us, right? So stuff like digitization and AI and supply chain, we need leaders that are ready and capable. And not just leaders in terms of senior leaders, it's leaders in their roles. It's the individuals that can take and adapt and grow with new ways of doing business, which is absolutely where we are, right? We are in a transformation across the industry, culturally, strategically, structurally, and people are critical to making that transformation happen. So, focusing in on making sure that you've got the right succession planning, that you're skill building across your employee base, at all levels: technical, operational, business, strategic, customer facing, skill building in digital and AI, and all the other important things, and really aligning your culture to transformation growth. Again, it's all about tactics and execution and really alignment. So entering 2026 with engaged teams that are aligned, that are ready to lead through disruption, that are ready to take on the new challenges is a real competitive advantage. And my 6th point here for leaders, things that you can and should be doing here in the 4th quarter to set you up for success, to close out strong, and to set you up for success going into 2026 is around customer-centric engagement, right? At the end of the day, you need to be really connecting with your key customers here at year end. Frankly, not just the call for cash, which that sometimes happens, right? When I was at Shell, we used to talk about having gold rush in Q4 and especially December, trying to close out all those open invoices and get paid and be able to have that in there. It's not just about that. It's about benchmarking, understanding what their priorities are. How do you finish strong together? Right? So while you've got goals, your customers have goals as well. So how do you finish strong together in the Q4? And then benchmarking on how their priorities are shifting. What's important to them? What's actually driving value, right? So customers don't necessarily want these incremental sales conversations. Sometimes they do, right? Absolutely. And frankly, we all need them. But it's also about having strategic partnership and creating solutions, creating value, identifying what really matters. So I recently spoke to James Hogan of Simon Kucher. In fact, that was last week's episode. So by the way, if you haven't listened to that one, go back and listen. If you have listened to it, listen again. It was a really good one. But we talked about the importance of pricing. And frankly, price is the biggest, fastest lever you have in your business financially. But it's not price alone. It's the value that you bring to your customers. It is the customer centricity that you've got. And early alignment with your customers now in 2025 to talk about how are we doing business together in 2026? What's going to make us great partners? How do I bring you value? How do you bring me value? Because I do think that equation goes both ways. How do we bring value to each other as partners, as collaborators, as value chain participants, right? It's really critical, right? And this customer centricity, we talk about it. We're talking about it again because this becomes a game changer for you and your business. And the companies and leaders that are figuring out what really matters, what brings value, how do you get that reflection of value back from your customers, are winning today, into Q4, and as we head into 2026. So that is a wrap for today. And what I would leave you with is we are entering the 4th quarter. And frankly, The fourth quarter is the best and most exciting quarter, right? So any sports enthusiast, whether you watch football, whether you watch basketball, pick another sport, fourth quarter is a game changer. Anything can happen. You may be down, you may be winning. It is go time though. Fourth quarter is the best quarter. It's not too late. You can really win still here in 2025 and set yourself up for success in 2026. I'd love to hear what you think. I want to find out what are you doing to set yourself up for success in 2026 and to close out strong in 2025. So send me a message on LinkedIn, leave me a DM. Love to hear from you. And as always, thanks for joining us today. Keep listening, keep following, keep sharing, and I'll talk to you again very soon. Thanks for joining us today on The Chemical Show. If you enjoyed this episode, be sure to subscribe, leave a review, and most importantly, share it with your friends and colleagues. For more insights, visit thechemicalshow.com and connect with us on LinkedIn. You can find me at Victoria Meyer on LinkedIn, and you can also find us at The Chemical Show Podcast. Join us next time for more conversations and strategies shaping the future of the industry. We'll see you soon.